This program is brought to you by Real Estimate. Get a free real estimate of your home's value today on the realestate.com.au app.
Thanks for being with us here on Business Now on what clearly is a pretty rough day for the markets. When we saw the stock market fall hard in the past week or so, you might ask yourself about the housing markets as well. Well, from the weekend's auctions, well, we don't get much of a guide, but nationally, 2,038 auctions, that was pretty healthy. Clearance rate also healthy, 62.1%. In Sydney, 829 auctions, just 55% of those were sold. There was another 1,800 or so private sales as well. In Melbourne, 782 auctions. Look, this is seriously strong now, just under 73% of those were sold. In Brisbane, 85 auctions, just under 52% sold, plus another 1,094 private sales. In Adelaide, 59 auctions, just under 73% sold, plus 309 private sales. And in Canberra, 54 auctions, clearance rate again, strong 72%, 127 private sales. Now, for more on property prices and just how values historically react to extreme share market volatility, I caught up with REA Group senior economist Eleanor Creagh a little earlier on.
Yeah, look, I mean, it's a great question, and clearly we've seen some significant uncertainty and turmoil really impacting global share markets. I mean, we still have quite a great deal of uncertainty around what the end outcome is really going to be here, but of course, notwithstanding that kind of inevitable impact to growth if these sweeping tariffs remain, it is certainly pretty important to look at what we think could happen in the housing market. And it could really be a bit of a tug of war, clearly dependent on where we eventually land. I mean, on the one hand, if we do see a kind of all-out global trade war ensuing and the potential for disrupted supply chains, that could mean higher construction costs, that could push up the price of new builds and renovations. But on the other hand, if we remain at this level of escalation or worse, clearly that hit to growth has the potential to bring forward interest rate cuts, which could possibly boost home buying demand, although overall uncertainty does make people cautious, and confidence dips will of course have their impact too, especially in big decisions like buying a home.
It's so true. And so the two things that really have an impact here, I would think, are the future of employment. If an economic downturn affects employment, that clearly has a knock-on effect for the housing markets. But then, as you make the observation, the real issue is that normally government tries to stimulate housing to pick up the economy, and that includes lower interest rates. So it's these two things that play out in the future. Right now, it's way too early to call.
That's exactly right. And I think even looking ahead, it is going to be that tug of war scenario. We do know that any hit to global growth will, of course, hit us here at home. And these moves or these actions that we've seen over the past week really do have the potential to affect jobs, confidence, and, of course, prices. Now, when we look at the labour market, of course, we know that having a job is fundamental to being able to continue to pay your mortgage. I think where we do have, I guess, some glimmers of hope or a potential silver lining here is, of course, the substantial home equity gains that many Australian mortgage holders have accumulated with the significant home price rises of recent years.
Tell you what, always good to have you in the program. Eleanor, many thanks for your time today.
Thank you for having me.